Hey, if you set up an LLC for your rental real estate investments, congratulations, you've taken the critical first step towards protecting your assets. But here's the harsh truth. Most real estate investors are making banking mistakes that will completely destroy their LLC protections without even realizing it. I've seen it happen hundreds of times. Someone gets sued, they think their LLC will protect them, and then bam, the court pierces the LLC and they go right after the individual's personal assets. Why? Because of simple mistakes, typically with their banking, that could have been avoided if they had this information I'm about to share with you. So in this video, what I'm going to do is I'm going to walk you through some of the biggest LLC banking mistakes that destroy your protection, and more importantly, how to avoid them. If you want your LLC to actually work for you when you need it, then you definitely need to watch this video. All right, let's get started. Okay, so let's start with the basics. When you form a limited liability company, you're creating a separate legal entity. That is, the LLC owns the property, not you personally. This is separation which protects your personal assets from the liability associated with that rental property that you have. So that means your home and your savings, they're protected from any lawsuits that may come from being a real estate investor. Now, but courts can pierce the veil of that LLC if they believe your LLC is a sham and you're not treating it like a real business. When that happens, your LLC protections vanishes and the creditors will actually be able to go after you personally. So how does this happen? Well, the courts typically look to a few things. Number one, is there any separation between you and your LLC? Basically, are you treating that LLC as an extension of yourself? The other thing they're going to look at is, are you using the LLC to perpetuate a fraud on someone or achieve what they would call an unfair outcome? So those are two of the things that they typically look at in deciding to pierce the veil. And if they find both, then your veil will get pierced. And guess what? The number one factor courts examine, in addition to this, is co-mingling of funds. So that's equally important. So the biggest mistake I see, and it's a veil-piercing nightmare for you if you have a structure in place, that is co-mingling. And what this means is where you're mixing your personal assets with your LLC's assets or your bank and money together. So what you want to do is you use your personal LLC, your personal account for personal expenses, but use your LLC bank account to pay business expenses. Never use that LLC account to pay personal expenses. If you're receiving rental income from your tenants, make sure you're depositing it into the LLC account and not into your personal checking account. Same with bills. If you have bills, of course, that are associated with that property, you should be paying those out of the LLC or using a credit card associated with that LLC. If you do use your personal card, then you want to make sure that you're reimbursing yourself from the LLC's account and that you're documenting it. And then use the LLC, never use the LLC funds to buy groceries, gas, or personal items. Because if you're doing that, you've got real problems there. So that destroys the protection when you're commingling funds. And if courts see proof of this, hey, guess what? There's no separate entity there, and all there is just you as the owner. Now, if you're wondering how does this play out in real life, well, let me give you an example here. So let's say your tenant sues your LLC. The attorney representing the tenant, what they're going to do possibly is subpoena your bank records, and they discover that you've been paying your mortgage, your car payments, your kids' high school tuition out of the LLC account. The attorney argues to the judge, Your Honor, this isn't a real business. He isn't treating this entity as a separate legal structure. It's just his own personal piggy bank. If the judge agrees with that analysis, that argument, then you've lost the protection of the LLC. Basically what the court will say, if you don't treat it like a business, we won't treat it like a business. So here's a fix. Keep 100% of your personal money in a personal account and pay for all your expenses out of the personal account and use your business for your business expenses. It's as simple as that. Now, if you ever use your personal funds for the benefit of the LLC, then make sure the LLC is going to reimburse you for that expense and you document it. Okay, the second mistake that we have, and it's going to sound obvious to you, and that is not opening the separate LLC bank account. And you'd be shocked how many investors skip this step. Now, there are different ways to do it. You've seen in my other videos where I've talked about how many bank accounts you need in your structure. But depending on how you've set things up, you need to have a separate LLC account set up to be collecting your rents. All right, so some people will just form LLCs. I see this all the time. And they keep using their personal bank account for the rental income and the expenses, even though they put title to the property into the name of the LLC. At the end of the day, it doesn't help you because they're going to look at it as one common enterprise. You're ignoring the form. Or worse yet, you open up an LLC bank account, but you never use it. Those are real problems. Now, if you're wondering why do you have to have separate accounts, well, here's what it does. It establishes the fact that the LLC, it's not you, it's a separate legal entity. And it shows a clean paper trail for tax purposes. Yeah, taxes and audits can be a real problem here as well. You see, it proves to the court that you're treating the LLC like a real business. Now, what do you need to open up an LLC account? We ran into this the other day with an individual, one of our clients, who was working with a local bank. We told them, all you need to do is bring in a copy of your articles of organization, you bring in your operating agreement, and you bring in your EIN letter from the IRS when you obtain the EIN. You bring that in, of course, you have your personal ID, and you can get that bank account opened up. Now, when do you open that account? Listen, I would tell you to open the account sooner rather than later, right? Because as soon as you get that account open, you want to start transitioning all your expenses associated with the LLC and the income coming from the property that it holds to that limited liability company account, and you get it out of your personal account. Because I've seen investors do this. They'll set up the LLC, they'll transfer the property in, and they'll wait 2, 3, 5 months before they'll get around to opening up the account. So they continue to run everything through their personal account. Don't do that. Anything happens during that time period, that LLC will probably not protect you. Now, mistake number 3, paying LLC expenses personally and not documenting. Now, I've already talked about this a little bit, stating that you can pay for expenses on behalf of the LLC and then reimburse yourself. But it's important that you document, because sometimes it's just going to happen where you don't have enough money in your limited liability company account to cover the expense associated with the property. Maybe you have to completely re-roof the property. So you end up paying for it yourself. Now, ideally, what you should be doing is this. All right, so if I had an LLC right here set up, and here's my property, and I need to tear this roof off, and I got a quote for $35K to do it. Now, in my LLC bank account, I have right now $7,000, so I'm short money. So, number one, do I take my $35K in my personal account and pay the contractor? You could do that and then seek a reimbursement from your LLC, so then you'd have to document this, right? Or what I would recommend you do is make a contribution of that money to your limited liability company. Contribute the money in and then pay for that, the re-roofing through the LLC. Now, the reason I'm telling you to do this rather than just go through the documentation process, because it's more paperwork. Why deal with the paperwork? But if you do that, all right, like I just described, make sure you let your bookkeeper or your CPA know that you've made that contribution, because they want to be able to track that for basis purposes. So that's the preferred way to handle the situation where your LLC does not have enough money. Okay, the other issue we come up with, there's no operating agreement for your limited liability company, or you ignore it. Listen, an operating agreement is the rule book for your LLC. It spells out ownership percentages, membership responsibilities, profit and loss distributions, who manages the LLC, and if you have meetings, what those rules are, and transferability of interest, all the important stuff that goes into creating a business. Now, courts often looked at the operating agreements to determine if a LLC is legitimate. And if you don't have one, or you have one but you ignore it, hey, it's evidence again that your LLC is just a shell, that you aren't treating it as a separate business entity. So this is the mistake that I see a lot of times, is people say, well, I set up a single member LLC. It's only me. You see, that mindset then can be used by the court to say, well, it's only you, so why should we look at the LLC? Listen, even if it's a disregarded sole member LLC, you still need an operating agreement, because that documentation establishes the LLC as a separate entity from you personally, and it protects you from having your creditors from going after your personal assets if there's a lawsuit. So that is a major common mistake that people have when it comes to running their LLC. So the fix is pretty simple, right? Go out and create a operating agreement, but also make sure that that operating agreement is a solid operating agreement, because here's the other thing that can happen. I've cut some videos on this. People will set up LLC operating agreements, or they'll have someone do it for them, and they don't understand what's in it. And then you find out that they're not following their operating agreement. So you can have an operating agreement in place and think, wow, I'm protected. But if you don't follow the operating agreement, then you can run into more problems. And so this often comes about when you have people who draft operating agreements that don't understand the duties that they're imposing upon the owners. And so that's a whole other video series that there are several videos I've cut on my channel you can go and follow where I talk about that. The provisions in your operating agreement, extremely important. All right, mistake number 5 is not holding annual meetings or keeping minutes. You see, this is the little known mistake, is that even though most states don't require LLCs to hold annual meetings, doing so is one of the best ways to protect yourself from veil piercing. Now, if you're wondering why that is, it's because when you hold a meeting for that LLC, just a rental property inside of an LLC, and you draft some minutes of any decisions that were made, maybe you decide to perform a cost segregation study on the property. So you document that in the meeting minutes. I mean, it's a great way to go out to dinner and get a tax deduction. You and the other owner, your spouse, go out to dinner, talk about the LLC, have a meeting there, and then you're able to write off that meal. What it's showing is that you're treating it as a business and it's separate from you. So what are some things that you should be documenting? Maybe if you decide to buy a new property in that LLC, all right? So you set up the LLC and then you decide to go out and acquire a property in the name of it, that would be a meeting. Major repairs or renovations. Maybe you're doing a turn and before you rent it out again, you decide you want to go through and basically rehab the entire property. There's a reason for that. Or if you're going to borrow money, changes to ownership, approval of large contracts, lots of things, reasons we can have meetings. Okay, you don't have to do this all the time. Once a year, once a quarter is sufficient. But again, papering your documents or your LLC binder is important. We recently went through a situation where one of our clients was sued and they were trying to pierce the veil and they were using many of the things that I just shared with you right now. Looking at the operating agreement, were they following the terms of the operating agreement? How were they treating the LLC? Looking at the bank accounts, how the money was being run. These are serious issues that you want to make sure you're following, because if our clients hadn't been doing that, then that company would have been pierced. All right, mistake number 6, undercapitalizing your LLC. That means your LLC has insufficient funds in its account to cover its normal business operations. So if your LLC is running low on fumes or there's no money in the account, you can't pay expenses, courts could view that as a shell entity that was never intended to run an actual business. So if I have an LLC that I've set up and I know that there's a lot of expenses that are going to be coming up, but I don't put any money into it, well, that could be a problem. So if in that situation, what I would do is, like I told you earlier, contribute enough money to cover those first foreseeable expenses. Now, if you don't have it initially, then you have to borrow it. That's fine. But then that's another way. You could loan money to your LLC. Whatever it takes, just make sure you put some money in. I've seen a lot of people who start up LLCs and they don't put any capital into the company. They have this LLC set up. It's been in operation for a bit, and then somebody gets injured. They sue the LLC, and the court says, well, you've never put any money into this company. It was undercapitalized from day one. So make sure you put cash in there to cover some foreseeable expenses. Now, mistake number 7, giving personal guarantees. Now, this is a sneaky one. You set up an LLC to protect yourself, and then you go and get a mortgage, and you sign on the dotted line that you become personally obligated to repay that note for that loan on that property. All right, so now, if you have property that you intend to put in an LLC, so going back to my diagram here, if I'm setting up an LLC and I'm going to be moving this property that I just bought because I had to close on it in my own name and I had to sign a personal guarantee. Well, if I move that property into this LLC, it's still subject to that note, that mortgage, and I'm still personally liable on it. Now, that personal liability or signing that personal guarantee, that's not going to create risk for me, right, in this situation, okay, because it's different. Once the property's in the LLC collects all the income, pays all the expenses out of here, right, and if I need to put money, I put money in to pay the mortgage out of that limited liability company. I'm not paying it myself. I've just given a guarantee that if the company doesn't perform in its obligation, then I'll step in and I'll be responsible to do that personally. That's fine. You can do that without there being an issue with this type of structure. But the thing is you want to make sure that if you've signed personal guarantees, there are some negatives to it, and that is your other assets outside of the LLC, they could be at risk. That is why you want to make sure that your other assets are protected. And this is something that many times people miss out on. They don't factor in that even though the property's in the LLC and it's protected now, hey, if you sign a personal guarantee, if something were to happen with that mortgage, they're going to come after you personally. That's why you got to make sure your other assets are protected. And then the last mistake I'd throw out you is having more than one property in an LLC, right? We don't want to do this. Right here, we want to keep our assets separate, because if one property gets sued, they all get sued. So we want to have separate LLCs, which means then having separate bank accounts. So when you separate out these LLCs, don't have one bank account here and no bank account over here and collect all the rents over here for both properties. That's going to get you in trouble. Now, one solution that we have when you have multiple LLCs on the banking account side, if you want to consolidate your bank accounts for your accounting purposes, set up a management entity here. So this is a management LLC that's managing all these. And so all the tenants will pay this LLC and you run all the banking through here. That would be an option for you in that scenario. Now you wonder, hey, is this commingling? It's not commingling here, because now you're performing a management entity's function. Okay, just like if you used a professional property management company that was managing 10 of your LLCs, they would be commingling the assets from those LLCs in their bank account. And then what they would do is give you an owner's statement down to your holding company, and so you have to have another bank account down here. That's extremely important when you're running this type of structure. Listen, your LLC is only as strong as you make it. The banking mistakes that I brought up here can destroy careful planning and years of investing in just one simple lawsuit. So make sure that you've taken what I've laid out for you in this video and analyze it, compare it to what you've been doing. Maybe there's some tweaks that you need to make with your planning. If you want to talk to someone about it, you can go into the show notes and click on a free strategy session link. It's right down there in the show notes. Check it out. You can talk to someone here at Anderson, and we can walk you through where are some areas you may need to tie up in your planning to make yourself bulletproof. So until next time, protect your assets and run your LLC like a real business.